No. The answer is no. Coronavirus is not going to ruin the stock market, and neither is the price of oil. And here's why. Hi, welcome back to my channel. Today, of course, we're going to talk about the stock market and how bad a week it's been. As you can see from the thumbnail of the video, I'm now up to $3,600 as a total investment, so I am down a ton of money, which stinks. In the last week, I did input another $100. I bought one share of Coca-Cola for just about $55. I bought one share of Vivint Solar for $11.33, and of course, I bought about $25 worth of Bitcoin. Now, certainly those are all down, but as we know, the entire stock market's down. So on the day, down $25 doesn't look too bad. On the week, we can see I'm down $400. On the month, I'm down $575. And really here, I was up about $110. So from there, we can see I'm down about $700 from my peak, which is terrible. On the 3 months, down 6.65%. On the year, down 7.51%. And all time down 7.43%. This graph says it all. Things were going great and then it stopped. Everybody's experiencing that right now, and I think there's a little bit too much of a panic. So of course I have an article pulled up, as I always do. This says the stock market's tanking, do nothing. This is the best advice that anyone can give. Why? Because we're all freaking out over something that's not particularly a huge issue. It says wash your hands, ignore the markets, don't touch your face, and don't touch your stocks. This is hard advice to follow. And then they go on and talk about what's happened in the past week. So over the weekend, price of oil down 25%. Treasury yield curve fell below 1% for the first time ever. They basically said that means people are paying money to lend money to the US government, and they're really flocking to these safe investments, bonds. And so they said these levels haven't been seen since 2008, which is really kind of a problem, really, is what I would say, because this is nothing like 2008. Everything about the stock market is looking good right now except coronavirus, this big scare. And as I always like to say, Warren Buffett talks about be greedy when others are cautious and be cautious when others are greedy. So this could be a great time to buy. Of course, I don't know that for a fact, but certainly that's what I'm going to continue to do, is continue to buy every single week. They said it feels like 2008, and of course it does. COVID-19, the disease caused by coronavirus, is killing thousands of people and infecting what might end up being millions. Businesses are shuttering and failing. Quarantines and travel bans are coming into place. Companies are slashing earnings estimates, and economists are slashing growth forecasts. Millions of workers are seeing their wages evaporate, and governments are bungling their economic and public health responses to the illness. It is bad out there. The markets reflect that. But for kitchen table investors, the best advice is not to flee to safety. That's what's really important. They said it's not to hedge with healthcare stocks or try to dump Chinese and Italian investments or short the American fracking business or to buy the dip. It's to do nothing. The best thing to do is nothing. I cannot stress that enough. They said here, the market is panicking and plummeting now as a horror of the COVID-19 is taking hold. It might crash harder as the mortality counts get worse and governments enact strict measures to contain the virus, or it might rebound. We don't know. That's the point. We don't know. And really, I think the point of this article was summed up right there. We don't know, but what we do know is the underlying fundamentals of the market are good. So do not freak out. Do not think that everything's going to go to hell in a handbasket. It'll be okay. They said in one 10-year analysis, hedge funds, which are typically only available to the richest, returned a quarter of what plain vanilla market tracking index funds did. They said for now, that means accepting things that are scary. That's really the big takeaway here. It's going to be scary. Things might not turn out great, but it is what it is. So we move on. Another interesting thing to note here is, of course, I've talked about Alpha Pro Tech, which is a company I recommended a couple videos ago. Even they're struggling now. Everyone's struggling. It is what it is. And of course, right now I want to take a break and say, if you enjoyed this video or any other that I've made, feel free to like the video, tell me what you want to see next, and of course, subscribe to the channel. It means a lot. We're up to 40 subscribers. Thank you so much. Now we'll just run through my stocks real quick. So Vivint Solar was up really big the past couple weeks. Total return still $105, but I was down 60 on the day. So on the month, we can see it's still up, but not very much. Over the last 3 months, we can see that's where this dip is coming from. Over the past year, still up 100%, but that large dip. And over the past 5 years, they are now down again. We'll just go over some of these basic ones. Coca-Cola, of course, is one of my larger holdings. Of course, I added to that. And as I said, I paid $55 for that share. So they are down. I am down $11 on this all time. But they are dividend king, pay very high dividend, and I think that's a big deal. Over the past month, still down 11%. Over the past year, up 18%. But we can see a large dip, back up, and then a large dip again. Very indicative of the market, and I'm not concerned. Next up would be VTI. Of course, this tracks the stock market as a whole and is really my best indicator of what's going on in the market without looking at a stock market graph. Over the past month, down 16%. That sounds about right. Over the past 3 months, we can see slow growth followed by this very quick drop off. Same thing over the past year, and over the past 5 years, we zoom out and see that the stock market is still up, still doing very well. Problem is, in the short term, things look very bad. And then, of course, Microsoft, I like to show. This at one point was my best purchase. Still up $30 on this all time, which is terrific. Over the past month, down 16%. Over the past year, still up 40%, but again, large dip. And over the past 5 years, 268%. Laptop's about to die. And let's see. We'll go ahead and scroll down. Walmart's an interesting one because they haven't struggled as much as these other companies. I think a large part of that has to do with everyone going out, buying toilet paper, buying soap, buying all these different accessories. Walmart is not going to struggle in a situation like this, and definitely right now it seems like this would be a stock that I'd want to purchase more of. Again, it is a little bit over my typical budget of $100, but we'll see what I do in the coming months. So as we can see on 3 months, they are down a little bit, but not much at all. Over the past year, still up 20%, and over the past 5 years, still up 43%. And I know I'm skipping around, but the big thing with this video is just that everything's struggling, and so I'm really picking out the stocks that are struggling the least or really have something of note. O is another one that I want to talk about because they do pay that monthly dividend. I think I'm going to purchase a share again this week. That's going to pay a 23-cent dividend here towards the end of the month. But again, I like this one because of that monthly dividend. And of course, with prices being down right now, it could be a great time to buy. So you can see down 8% on the last month. It's down 3% on the past 3 months. But of course, when we go to the peak, it was trading for as high as $83, now down to $73. And that really just means that at that purchase price, those stated dividends are actually going to be a higher yield, which is awesome. And over the past 5 years, we can zoom out and see that this has been a great growth stock. Really a great growth REIT. And the last one we'll touch on is Bitcoin, because of course it's my largest holding and it has struggled, to say the least. So total return on this one down $139. That's no good. But of course, I think that in the long term, there's a lot of growth here. So down 11% on the last week. On the past month, down 21%. Past 3 months, it is up a little bit. Over the past year, up 102%. And over the past 5 years, up over 2,600%. Now, something of note did happen with Bitcoin this weekend. There was $120 million of Bitcoin that was hacked. And then I guess there was a sell-off. And of course, whenever somebody has a Bitcoin transaction that was that large, it tends to tank the price a little bit. But as that article even mentioned, people are sort of flocking to things like gold and Bitcoin because they're unsure of the markets. So this could be an interesting one in the coming weeks. But of course, I'm going to continue to buy because I don't think the real peak is going to hit until December of 2021. I say it every week. I mean it. I really believe it. I'm no expert, but everything that I've read says that this could be a terrific investment to have. So it makes up about 17.4% of my portfolio right now. My equity is only $580, cost is $720, but again, the quantity is the most important part here. So I'm up to 0.0735 Bitcoins. I'm shooting for about 0.2 Bitcoins, so roughly tripling that by the end of next year when it peaks. But go ahead and stay tuned and we'll see how that plays out. I'll be back with another video here at the end of the week. Something unfortunate happened here on YouTube. Go ahead and guess in the comments what you think it is. And like I said, I'll be back at the end of the week. Thanks.